in financing to address the challenges of climate change, this in 2012, according to the second joint MDB report on climate finance, which was released today. This is in line with the commitment by MDBs to enhance the transparency of their investments in climate change, mitigation, as well as adaptation. Joining us on the line from Tunis, we are joined by Mafalda Duarte, the Chief Climate Change Specialist at the AFDB, for details of the report.
Let me start by saying that we have been very committed at the African Development Bank to make sure that transparency and accountability in terms of the climate finance flowing to developing countries is enhanced, and we have done so by actually being at the forefront of the development of the joint MDB methodology for tracking climate finance in adaptation and being actively engaged in the development of the same approach for the mitigation area. This has enabled us to come out with these two reports, one last year that tracked the 2011 commitments and one this year that is tracking the 2012 commitments. And this is a methodology we will be using going forward to track our annual commitments to climate finance. For the African Development Bank, we have made a strong commitment a few years back that we would be investing more and more on climate resilient and low carbon development in the continent, in line with the specific countries' priorities. And we are showing by applying the tracking approach that we are doing so. While in 2011 we have committed 1.7 billion to adaptation and low carbon development in the continent, we have increased that substantially in 2012 to 2.2 billion, 1.7 of which for low carbon development. Now, you've asked me why for us this level of investments in low carbon development in the African continent is important. Because what it is doing is it's responding to the specific needs of African countries to close their infrastructure gap, and invest in key sectors such as energy and transport. African countries more and more are issuing strategies and policies to back up their ambitions in terms of renewable energy, and we are there to support them, and this is exactly what we have been doing.
Mafalda, let's look at, let me jump in there and perhaps look at the strategies in a little bit more depth. I mean, understanding that this financing has been differentiated into 78%, which has been earmarked for mitigation, and 22% for adaptation. Is this the reflection of the key priorities and how we should be dealing with low carbon development?
I firstly want to say that a lot more needs to be done in terms of adaptation. But this is also a reflection of the less commitments of the international community to provide concessional finance to adaptation than to mitigation. Because when you look in more detail at what the joint report is saying, or our own internal analysis at AFDB, what it is saying is that we need a certain level of concessional finance to unlock our own finance, and by doing so, fulfilling what are investment plans that the countries have in these sectors. But because internationally there has been much less commitment in terms of finance to adaptation and much more so to mitigation, what you will see then in terms of commitments of the individual multilateral development banks, and in our case
Mafalda, again, let me interject. I mean, I think you continuously highlight that the international community is not finding financing adaptation attractive. Why is this not as attractive as mitigation?
It's because there has been a worry in terms of the international community to separate very clearly adaptation and development finance, and that's extremely difficult to do. It's also much more clear-cut, let us put it this way, the returns on investments in sectors like energy, than on other sectors that are at the heart of adaptation. On the other hand, as you might know as well, in terms of adaptation, there is a certain level or a certain degree of uncertainty in terms of what will happen in the next decades. A lot will depend on the commitments to reduce greenhouse gas emissions, whether we will be in a 2-degree path or in a 3 or 4. That will have a major impact in terms of what level of adaptation we will need to undertake. And so many countries, because of that level of uncertainty, will not prioritize at the moment making expensive investments in, for example, certain types of infrastructure when they don't know with a certain degree of certainty what sort of scenario they will be facing.
Mafalda,
so it is a combination of factors.
Right. If I can just jump in there quickly before I let you go, you raised these concerns that the development community has around the stability and some of the returns on their investment. And of course, when we're looking at low carbon development, it's really the energy sector that we're seeking to make the most impact in. How is Africa doing from the findings of the report in terms of diversifying its energy sources? And is that something that you think we're winning the battle on?
We are not winning the battle. We have started. We are doing very important investments, but it will continue to require the commitment of all. It will continue to require the commitment, which is already there, of the governments, of the investors, domestic and international, of the development banks, like African Development Bank, and of the international community to put the level of concessionality that is required, that it allows us to provide the grants and to buy down the investment costs of these type of investments, which are by nature more expensive.
That was Mafalda Duarte, Chief Climate Change Specialist at the African Development Bank.